Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us again here at Ausbiz. Let's take a look at what happened overnight. Global stocks mostly lower as the threat of further tariffs and the future of Ukraine weighed on investor sentiment. On Wall Street, the release of minutes from the last Federal Reserve meeting led to choppy share price action, as they showed Fed members were concerned about the potential inflationary effects of President Trump's policies. The major indices did turn positive towards the close. US listed shares of Rio Tinto were lower after the world's largest iron ore miner posted a slide in annual profit on weaker demand from China, underlying profit coming in below expectations at 10.9 billion US, 7.5% lower than a year earlier, and it cut its final dividend to $2.25 US a share. Elsewhere, electric truck maker Nikola plunged in the wake of its filing for bankruptcy protection. Specialty chemicals company Celanese also tumbled after reporting a quarterly loss. Shares of Shift4 fell following its fourth quarter results and on news that its payments processor has agreed to buy Global Blue in a deal valued at $2.5 billion US dollars. And shares of online marketplace Etsy fell as it missed fourth quarter estimates for revenue and gross merchandise sales. Well, minutes from the Fed's latest meeting reveal considerable uncertainty over its outlook, prompting policymakers to take a cautious stance, saying increased upside risks to the outlook for inflation and uncertainties concerning the neutral rate of interest, the degree of restraint from higher long-term interest rates, or the economic effects of potential government policies. Now, in data, housing starts in the US tumbled almost 10% in January, attributed to soft demand, elevated mortgage rates, and a spate of unusually cold weather. And following the release of the Fed minutes, the US two-year Treasury yield fell to around 4.28%. The 10-year was down to 4.54. Markets now pricing in zero chance of another rate cut when the FOMC next meets in mid-March, and a 70% chance of a cut by July. The US dollar is a little weaker, the Aussie trading at 63.5 US cents, and Bitcoin is trading over 96,000 US dollars. Oil prices have held near a one-week high on concerns about supply disruptions in Russia and the US, while the market awaits clarity on sanctions as the Trump administration tries to broker a deal to end the war in Ukraine. Brent futures around a third of a percent higher at $76 a barrel. Copper has continued to weaken, down another 0.7%. Iron ore, little changed at $107 US dollars a tonne. And the gold price has eased to $2,935 an ounce. So, let's get across what is moving markets at the moment. Ira Epstein joining us from Linn Associates. Ira, good to have you back on the show. Thanks for joining us. I was just talking about those Fed minutes. There is obviously some doubt there from policymakers about the inflationary effects of Trump's tariffs. How do you view it? I see in your note there you're saying it's confusing at the moment.
I think everybody's confused. They made mention, and I'm talking to the Fed, and by the way, hi, Andrew. By the way, what the Fed said was there's uncertainty around trade and immigration, and that could be hurt disinflation. Why? Well, if you have fewer people working in America, you're going to have to pay up to get the same amount of jobs done. Number two, I've never seen tariffs that aren't inflationary, and the Fed is saying that to you. What the Fed did say is that for the moment, if you read through it, as they are going to consider peeling back the runoff of the sheet, they're going to make sure that the Treasury, until a budget is done, that they have enough money to operate. So that is what I'm reading in the market. And it's the reason that after this came out, you saw that yields on the 10-year immediately fell back. And that's because they were talking the runoff and they would buy maturing yields that come out from the Treasury if they had to. The other part that I looked at on is they have no idea what Trump is doing, nor do any of us. I mean, one day it's 25% tariffs on Canada, Mexico, 10% China. Then the 25% on Canada, Mexico taken off. Then we're going to have reciprocal tariffs instead with everybody that has a tariff on us. And yesterday, now we're going to have 25% auto tariffs, tariffs that start maybe at that high on pharmaceuticals, chips, and it'll only go up from there. I don't think there's any idea as to what is going on in tariffs. And then the situation between Russia and the US is beyond bizarre. I realize the president wants to end the war, and he should. But to even remotely say that Ukraine started this war, I'm lost with that. They were defending themselves, they weren't attacking Russia, just the opposite. But what Trump does is he muddles everything. That's the intent. The intent is to get you so off base you don't know what's coming, left or right. And the simple fact is he has the power to do this. If he pulls back on defense of Ukraine and doesn't give monies via NATO for that, Europe doesn't have enough money to do it right now. Europe has for years, a decade or more, avoided paying into what they had to in defense spending, and Trump is calling everybody out on it. So there's confusion in the markets. The one market's not confused is the stock market because it did not get the signal that the Fed was going to tighten. It got the signal that the Fed still thinks that there's a path here for inflation to fall once the clarity comes on the tariffs and what's going on. And we should know a lot more by April.
Ira, meanwhile, Elon Musk's Doge cost cutting committee is at work. Of course, there's a lot of pushback there, particularly in Washington. What are the likely effects if you see these mass layoffs, do you think?
Well, I'm waiting to see when it shows up in the unemployment claims. That's number one. They are firing the fat. They are firing the temporary workers or those new on the job that are considered temporary workers. So they're first cleansing, and where they see they have to, they say, we erred, we have to call people back. They've done that in a number of agencies already, a nuclear one that happened right away, and there'll be more that they do that on. But the name of the game is that somewhere along the line, somebody, and that somebody's name is Musk, and it's been held up by the court, has been appointed by the president, not as the head of an agency, but an independent to give ideas to the president. And the president is the one that makes the cuts, not Musk. And I don't think people realize that. He has the president's ear, and it's a good thing. Think of all the pork, as we call it in America, that has been put onto bills that has just sat there for years, and the money keeps coming to whatever. How could they have that many people on Social Security rolls that are 110 years old and older? Are they getting checks? That part wasn't answered, but they're on the Social Security rolls. So we have to find all this out. This is all fact finding. This is, yes, letting certain things go. Yes, agencies are going to be either crushed, molded into something else, but we won't hurt ourselves in a lot of ways. Unfortunately, they're hurting people, but that's part of what corporations do, right? And Musk is treating America like it's a corporation, and it's up to the president to make the decision.
Yep, he is indeed. That seems very apparent. Now, Ira, now we've spoken about precious metals, in particular gold, for quite some time. Of course, you're saying you continue to like it. Of course, we've seen that price trying to make that break to 3,000 US dollars.
Right.
Interested to note that you're pointing out just how much gold the US Treasury is sitting on.
If they marked it away from Brent Woods, many years back when the U.S. Got away from the gold standard and so on, gold was $42.22 an ounce. Believe it or not, I didn't realize this. We count at the Treasury gold, all the gold that the U.S. holds, at that amount of money. They have not marked it to the market. If they mark it to the market, that changes so much. It would change the Treasury pictures and so on. There's pros for that. There's cons for that. I'm a person that doesn't want it marked to the market. I prefer it left there because I want to see America get its house in order. We can't keep spending. We can't keep running these deficits. That's why gold is inflationary in the winter right now. The winter's also Bitcoin. Even though you're saying, oh, it's down to 96,000. Think back 6 months ago, was it 96,000? No. The question then was, when would it go to 100,000? And the question on gold was, for me at least, last year when you and I talked and I said how bullish I was, I had a $3,000 target. I have a feeling I'm going to have to roll that up. Goldman Sachs just came out yesterday with a $3,100 target. So until these things get settled, people see it. They buy the gold because it's traditionally been a safe haven, and they are buying Bitcoin for the same reason because they ain't going to be making a lot more of it. I am not saying it replicates for me what the real standing in gold is. However, it's a number two. And I mean, people accept it as a number two now.
Yep. All right. Ira, just before you go, back to equities, what's your assessment of what you've seen in earnings season thus far? I guess the next one we're looking at is Walmart, perhaps to get a sense of the state of the US consumer.
The Walmart should do very well because they, Amazon, Costco, those are the companies in America that service people of every strata, every price strata you can imagine. You want to keep your eye on NVIDIA. That's coming up. It's going to be good, but everybody looks down the road, and no matter how good NVIDIA does, there's inevitably behind it a negative reaction because it's not enough. And that's something you have to consider. But what has worked so far this year is being in tech. Everybody likes to knock it, and they say the market is broadening out, and it is. And you're seeing other companies do very well. And I like other companies. I like the broadening out. However, I am nervous at the S&P at 6,200 this early in the year. So I would use some caution, but still be bullish and still be buying until it's time not to. Just don't go plunging in.
Ira, thanks so much for joining us, Linn Associates.
Thanks for having me.
So let's return to the local market, what our expectations are as we get going on this Thursday morning, looking for a negative start. SPI futures off almost 0.5%. Also, a reminder of our next virtual investor event, Private Access, from equity to credit and plenty more. Does look at the opportunities that are set to grow exponentially this year and beyond. It is on March the 6th, and we'll get you across why and how you can access those opportunities in private markets. You can register at ausbiz.co/private access, and it is free. Stay with us, the Open just around the corner.